Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video we're going to go through the Forex market outlook. We're going to take a look at the strength and weakness table and see what we go from there. So going to focus mainly on the dollar. The reason being is because we are at that reversal area. We have been for 2 weeks now at that -5. So we are coming towards the end of the year. We're coming to that seasonal play where the dollar is usually quite weak, and that's what we've seen for the past month, is the market being quite weak. But we are coming into reversal stages now, so we may see some short-term pullback in that dollar weakness, and it may come a little bit earlier. The end of that can come a little bit earlier than the end of the year. So quite interesting to see that we're in the -5s here. It's interesting to see where a lot of the major currency pairs are, so that's where we're going to focus our attention. Kiwi has finally jumped up that last hurdle into a reversal zone. And, we talked about the commitment of traders last week and the fact that there is a strong possibility that price on Kiwi will reverse. It's just where will that come into play? And now the strength and weakness table is showing that Kiwi strength continuing. So Kiwi dollar is almost the perfect reversal pair. We've got dollar at that -5. We've got Kiwi at that +5. Two reversal zones ready for a potential move there. So we're going to take a look at that market. Euro lost a little bit of ground this week, as well as pound. Pound obviously fluctuating due to Brexit negotiations currently. So we're going to take a little look at that as well. Swiss franc looking quite strong, but I'm not focusing too much on that in this video. So going into the charts, we can see that Euro US dollar is in and around this area that we spoke about, around about that 122. We can see there's a lot of consolidation in and around this area through here, which we're expecting the market to go and retest. We've had a slight retest of the low of that move. I was expecting a little bit of a push to the upside. However, price has remained within this 4-hour zone just through there. Okay, so market is bouncing between sort of 121.70 and 1.2040, 102.050, and we're just kind of in that zone where we don't know what's going to happen, because we're at this sort of end of a long trend here. We're finding a consolidation. So if the price was to break out of the lows and we were to see a little bit of reversal to that dollar weakness, I'd be looking for the market to break out of this 4-hour zone first, and then looking for short opportunities. Vice versa, if the market breaks to the upside, we know that dollar is going to be a little bit weaker. So we'll see how the dollar plays out this week. It could go either way. So keep an eye on this zone here on Euro US dollar. Pound, obviously Brexit negotiations really going to affect this. There is a recent headline suggesting that the negotiations are going to extend past the deadline, which could be a little bit of a positive for the pound. It may show that the UK and EU are trying to come to some agreement and that they don't want no deal. But we saw this very bearish weekly candlestick last week, mainly because the no deal was really put on the table, and even Boris Johnson, the UK Prime Minister, was suggesting that a no deal is highly likely. So if we were to see that no deal outcome, I think we could see the market head towards the 128 level. These previous structure lows, if we look left at that point, we have nice support, resistance, support. So this area would likely be targeted on a no deal. If they do seem to get a deal across the line, then 1.35, the current resistance, which you can see here, will be the likely target, and even a breakout for further upside for the pound. So again, just two key levels to really watch going into this week. Kiwi as well, big talker for us. We spoke about this in last week's videos. We talked about the fact that the commitment of trader reports are really highlighting to us the fact that the contracts are at all-time highs. Now, we did talk about the fact that there is a nice little block just up here of recent action where price was battling for support and for buyers and sellers. Sellers did eventually win that battle. So if the market headed towards this area, were the sellers going to defend these levels which they've defended back in the start of 2018? That could be something we take into consideration. What I like here as well is the fact that we're in this uptrend and that we're heading into overbought conditions. On a weekly time frame, that's always good to take a little look at going into the week. If we were going to get that rejection, I'll just go to the daily time frame. We do have, or even the 4 hour shows us, again, very similar to Euro US dollar. We've got this sort of box zone which the market has been working with. And last week we said if the market failed to make any lower lows like it did, we'd expect the market to move to the upside. Now, we didn't get that extension that we were expecting. However, the market has remained in this 4 hour trading range. So if we were to get that breakout, very much like Euro, to the downside, maybe that is the sign that the commitment of trader reports have found the top, or the commercials have found a top in the market. They're willing to offload their contracts. The market would move to the downside and would be looking for a little bit of dollar strength in that move as well. So those are going to be my 3 key charts going into this week: Euro, Kiwi, and Pound. Keep an eye on those key levels. Watch for those key breakouts on the 4 hour charts, and I'll speak to you next week.